As a transaction reaches the final stages, both buyers and sellers will encounter closing costs, the one-time expenses required to officially transfer ownership of real property. These costs can sometimes surprise unprepared buyers and lead to delays or dissatisfaction. It's essential that real estate professionals in Arizona understand what's included, who pays for what, and how to communicate these items clearly and lawfully. What are closing costs? Closing costs are one-time fees paid at the conclusion of a real estate transaction to complete the sale. These include various charges related to the mortgage, title, escrow, inspections, and more. Buyers should be prepared to pay 2% 5% of the purchase price in closing costs, in addition to their down payment. Typical buyer-paid closing costs. Here are the most common costs buyers may encounter at closing. Fee description: loan origination fees. Charged by the lender for processing the loan. Appraisal fee required by the lender to verify property value credit report. Fee cost of pulling buyer's credit. Typically $25 to $50. Lender's title insurance protects the lender's interest in the property. Escrow fees paid to the escrow company handling the transaction. In Arizona, these are usually split between buyer and seller, unless negotiated recording fees charged by the county to record the deed, home and pest inspections optional but recommended, may be paid outside of closing but are part of the overall cost. HOA transfer disclosure fees. If the home is in an HOA, buyers may pay a portion of transfer and disclosure fees, negotiable. Prepaid items include property taxes, homeowners insurance, and prepaid interest survey fees. Rare in urban Arizona, but may be required in rural or custom home purchases. Arizona custom practice versus negotiable terms. While Arizona has certain customary practices, such as splitting escrow fees and the seller paying the owner's title insurance, all costs are negotiable. These terms are outlined in the AAR Residential Resale Real Estate Purchase Contract, lines 133-160, which specifies which party pays for title insurance, escrow, HOA fees, and other closing costs unless otherwise agreed upon. Preparing the buyer. As a real estate professional, you are not a lender, attorney, or tax advisor, but you are expected to help prepare your client for what to expect. Setting proper expectations around closing costs can prevent last-minute stress and maintain trust. Set expectations. Early. Discuss estimated closing costs during pre-qualification or first property tours. Remind clients that closing costs are separate from the down payment. Emphasize the need for cash reserves to cover surprises. Example: a buyer puts 5% down on a $400,000 home. Their down payment is $20,000, but they also need $10,000, $12,000 in closing costs, bringing their total out-of-pocket expenses to over $30,000. Without early guidance, this could come as an unwelcome shock. Use a sample loan estimate or settlement statement under TRID, TILA RESPA Integrated Disclosure Rules. Lenders are required to provide a loan estimate, LE, within 3 business days of loan application, summarizing expected costs, a closing disclosure, CD, at least 3 business days before closing, itemizing final costs. As an agent, you can use a sample LE or CD to explain line items like prepaid interest, escrow reserves, lender and title fees. Best practice. Tip: provide a closing cost worksheet or ask the lender to prepare one. If you don't feel comfortable discussing specifics, simply say, your lender can give you a detailed estimate of closing costs, but here's a general overview so you're not caught off guard. Clarify financial terminology. Many first-time buyers confuse key terms. Make sure they understand the differences. Term definition: earnest money, initial deposit showing good faith, applied toward purchase, down payment buyer's equity contribution toward the loan, closing costs, third-party and lender-related fees paid at the end of the transaction, legal and regulatory considerations. As with all financial aspects of a real estate transaction, the disclosure and handling of closing costs must comply with Arizona law, federal lending regulations, and ADRI standards of conduct. Arizona Administrative Code, R428-1101 Code, Section Agent Obligation, R428-1101B. Agents must act honestly and fairly, disclosing material facts, including financial costs, R428-1101F. A licensee must not misrepresent or conceal material details related to the transaction. This includes earnest money, financing, and anticipated closing costs. Practical application. If an agent downplays the amount of closing costs to make a deal sound more affordable, they may be violating both R428-1101B and F by concealing material financial information. TRID Federal Disclosure Requirements. Lenders must provide a loan estimate, LE, within 3 business days of receiving a loan application. A closing disclosure, CD, must be delivered at least 3 business days before closing. Buyers must sign the CD before closing can occur. Important note: agents should understand the purpose and timing of these disclosures and remind buyers to review them carefully with their lender before signing. ARS, Paragraph 6846, Mortgage Lender Fee. Disclosures. Arizona law requires that mortgage brokers and bankers fully disclose all fees, charges, and terms related to the loan, in writing, and in a timely manner. Commissioner's Rule. Legal and tax advice prohibited. While agents are expected to help clients understand transaction-related costs, they must not provide legal or tax advice. Instead, refer clients to the lender for a full breakdown of closing costs. Refer to a CPA or tax advisor if questions involve deductibility of fees or property tax implications. Refer to a real estate attorney if questions arise about escrow responsibilities or title insurance disputes. Early and accurate cost communication is a legal and ethical duty. Closing costs are a standard and expected part of every transaction, but without proper preparation, they can cause confusion and disappointment. As a real estate licensee, your responsibility is to introduce these costs early in the buying process. Use visual tools like sample LEs and CDs to explain the structure. Differentiate between down payment, earnest money, and closing costs. Stay compliant with AAC, R428-1101, TRID, and Arizona law. Refer clients to qualified professionals for advice outside your scope. Statutory and ethical reference. Recap, rule or statute summary. AAC, R428-1101, B. Agents must disclose material financial facts, including expected closing costs. AAC, R428-1101, F. Licensees must not mislead or conceal terms like earnest deposits or closing fee obligations. TRID, Federal, requires timely delivery of loan estimate and closing disclosure documents. ARS, Paragraph 6846, mandates full disclosure of loan-related costs by mortgage lenders and brokers. Commissioner's Rules prohibit agents from giving legal or tax advice. Referrals to experts are required when needed.